Welcome back. In this video we're going to learn how to make adjustments to our moving average strategies. For example, the previous video explained how to use moving average crossovers. So to do a simple recap, the important things we did is just to import a trade.mql5. It's a library that contains trading function and trading functions. Also, in that library, there is a class secret which contains the exact trading functions such as say buy, sell, buy, stop, and on in each function we never made any changes. Then each we never made any changes. We only made changes in the onTick function. In the onTick function, we actually we don't need this. Don't need this one. And also even this one. In the onTick function, we got the values of the small moving average. In this period, in this case, we're using period 20. So we're using an exponential moving average and using price clauses. To do a simple recap, we declare our moving average array for the small moving average. An array is just like a table which stores values. So in this case, we're going to be storing like maybe 3 values here. There's 3 values in these simple tables. So we use the moving average definition one to get the price, the current price of the small moving average, and then array set as series enables us to arrange them and then copy them into the moving average array, the table. Copy them into the table. So we copy them from the definition. Copy the current price. We copy only three values. The current, the previous one, then the other one. The same thing we did to the big moving average. This is all we need to know. We copied them into the arrays. This is the bigger moving average, 50, exponential moving average, and price clause. To ensure that we are not facing many challenges, let's say entering lots of positions at once, we first check if the total positions are equal to 0. If that's the case, we test if we have a moving average crossover, let's say to the upside. This one means the current price of the small moving average is greater than the current price of the larger moving average, but the previous price of the small moving average was less than the previous price of the larger moving average. In the numbering of the values, we start from 0, 1, 2 backwards. We count backwards. In arrays, and since the condition was satisfied, we enter the buy position. Here we have not said this SL and TP. Here I'm going to show you how to make adjustments. So the same thing, we test the condition for the moving average crossover to the downside, and we place a sell position. Now we want to make an adjustment where, for example, we have been having a buy position, and then due to a moving average crossover to the upside, but then we exit the position when we have a moving average crossover to the downside, and we close the position, then enter a sell position. If you have been having a sell position, then moving average crossover to the upside, we enter buy position. We close the sell position, enter buy position, just like that, as simple as that. So let's make the adjustments. So what we need to do is maybe to create a variable, a simple variable for last direction. I can call it, let's say, int last direction. Let me set it to 0. So for a moving average crossover to the upside, we shall give that a value of 1. To the downside, the value of negative. So here we say last direction is equal to +1. Here down, we shall say last direction is equal to -1. All right. If you need to follow up with the code, this is a simple code. You could slow down a little bit. A simple code. Right. Now what we're going to do is to test this. For example, this was when we had no open positions at all. So here we're going to test if you have, let's say we've been having a position and then something happens. I'm going to copy the code. I had written it somewhere, but it's almost the same. It's the same almost. So I'm going to paste it here. For example, if we had a position, so what we check, let's, for example, if the last direction was positive, and then we have a moving average crossover to the downside, what do? We close the position, alright, and then we enter a sell position, and then we set the last direction to negative. If the last direction was negative, and then we have a moving average crossover to the upside, we close the position and enter buy position. Just as simple as that. And then the last direction is positive. To close the position, we use a function called position close, and then this one, it requires you to input in the ticket of the position. Here we're using position get ticket of the current position, and then the deviation, which is -1, and that's it basically. So if we compile, we can compile and test our strategy. Let's, for example, on gold, let's say, for example, last 6 months, we are going to use the visual mode so that we can see how the whole thing works. Okay, it's starting. The speed is the speed is mobile. It's much. Okay, here we had the moving average crossover to the downside. We got out from here, then again we enter the buy, then we got out from here, sell, we sold, we got profit, and then we got out from here. It enables us to capture the overall trend. From here, then we close the sell position, then we enter the buy position. We are currently in a buy position. I think I can slow down the thing. You see, we are now in a buy position. Our lot size is even only 0.01, alright? And yeah, you see, we have closed the buy, then we are in a sell position. I think, yeah, we can continue, we can speed up the whole thing, and the results, 30%, alright? That's not bad. It's around actually close to 40%. If you increase the lot size, let's say for example to 0.1, this I think, I don't know, let me see the result. If we increase the results, the lot size, in the next video I think I'll make an explanation and also a custom calculation on how to calculate the lot size based on, let's, for example, a percentage of the trade you want to risk on each account. Yeah, I think that's it. So we have adjusted the lot size to 0.1 in this case. So let me see maybe the difference in profits. It could work for you, but this is just the 6 months. Doesn't necessarily mean that it will work for you in the long run. So in this case, we started with $1,000. Now we have around $5,300. So it's like it has flipped it like 5 times. But this is, I don't think this is very stable in the long run, right? But these adjustments are the ones which tend to make a strategy to work. Yeah, I think that's it, and thank you for watching.